Hello everyone, welcome back to my channel. So this week, this video marks the end of week number 17 in this road to 200k challenge. This week, unlike the previous one, was a week of recovery for the markets. The markets went up pretty much consistently all over the week. Every single day the market went up, and in the context of the stocks that we have in our portfolio, especially Estée Lauder made quite a good recovery, I would say, because it started the week somewhere around $63-64. Now it's at 70. It ended up quite steadily all throughout the week, especially on the last trading day, yesterday, on Friday. The stock went up 5%. There has been, and I've been following the news about it, there has been a lot of action in terms of institutional investors buying and selling the stock. If you type in Estée Lauder and you search for news on Estée Lauder stock, you'll be able to see that there has been a lot of institutional investors. As I can show you right here, for example. Let me see where I can find it, but yeah, let's see. So you see that Nasitish also, this is the news from November 20th, has also added more stocks to his portfolio here on Estée Lauder. Also Nuance Investments as well, gross position in Estée Lauder companies, and as well this director Paul J. Freiberg also acquired 5 million in shares. This is the news also from November 20th. So I can't see where those news are, but I also saw that some institutional investors, also some company directors, senior managers also sold some shares right after the stock tumbled around 20% post earnings. Some sales have already been done also during the third quarter, so there's been a lot of action concerning this particular stock. But overall, this week the bulls won out and the stock has been steadily rising, and now we have recovered quite a chunk in terms of the hole that we dug ourselves into this position. But for now, the position is recovering, and let's hope to keep it keeps that way over the coming days, over the coming trading days, so that we can somehow sell the stock right after. And so at this moment, I must also say that we bought some more shares. We bought 60 more shares here yesterday, and at the price of 68.08. And this particular price, of course, also contributed to lower the average price even further. We'll get to see in a minute how much it will end up being, because of course this average price also contains the money we got from some of the premiums, and so I would not count on those, because at the end of the day the premiums are our profit, so we cannot count on those. In terms of the other stocks, also Ford Motor Company, even though it was a week of a bit up and down for Ford, yesterday it rallied 3.5%, but still at this moment in time the stock is again not close to the strike price at which we want to sell, which is 13.5, and even if we stretch our maturity to 3 weeks after, we would receive a meager 1 cent in the profit, because the probability of profit is 100%, meaning the market predicts a 100% probability that it will not reach this particular price, so that it's not worth to sell it. at this particular stage. Also for Pfizer, also a week of recovery as well, especially in the last few days. The stock has, again, like for, has been up and down throughout the week, but again, even if we stretch it out to 3 weeks ahead, the strike price at which we want to sell, at this moment is not available, but also the market is closed, so we don't know what premium we would be able to get, but it would be around between 3 cents and 7 cents. So at this point, it's not worthwhile to commit ourselves, and especially for 3 weeks for such a meager premium. So we'll have to wait and see what happens. In terms of Estée Lauder, I forgot to show, but as you can see right here, the current option chain for 1 week still does not provide us with prices, so they are not available calls to be sold at around the 81 and 80 range. You see, we will have to stretch further out in time, but apparently there is already for 2 weeks these two strike prices are already available, and so our current average price is around this is within these two, I believe. We'll have to confirm in our scoreboard, but I believe that we may be able to selling very soon some calls on it if it continues to rise with just a little bit more of a climb by the stock price. We'll be able to sell some calls on it, but again, we'll have to wait and see what happens. But so far the signs are encouraging, and of course, as we mentioned, we don't need the stock to recover all the way back from where it began, in terms of from where it was in terms before the tumble of 20%, because before it tumbled down 20%, it was around the 87-88 range, and so we no longer need for that to recover fully. We only need for that to recover up until the 80-81 range. All right, and so this is very, very good. And so far, this is it. We'll have to wait and see what happens. For the time being, let's just update our scoreboard to see what is in fact the actual average price of our holdings now of Estée Lauder. So for the time being, let's just copy this right here. The trade took place, as you can see, on November the 22nd, right here. So November the 22nd, the price was 68.08 and the fees was $1, right? So once again, it's still there. We bought the stock at the price of 68.08, 60 shares, so this is 0.6 of a contract, of an option contract. Again, we don't receive any premium, we paid $1 commission, and so basically this is it, right? And so we won't pay anything to close this position so far, at least, right? We'll have to wait and see what happens, but this is so far it. And now let's determine how much of this particular acquisition of shares ended up contributing to lower our average strike price. So let's just add some more here, open and close some parentheses, and now we'll have to put in here, right, and with a minus signal here, right? So let's just start by selecting this one right here and times the column H, which is this one. All right, now let's see what happens. For some reason this is giving me an error, which I don't know why. Oh, I see why. All right, so let's erase this. This doesn't make any sense here, right? So now we have to use the denominator now to update, in fact, the denominator. So this will be here with the 289, this one. Alright, so now this is the new average price. It didn't come down by very much. It was before 80.38. Alright, so and now it ended up just lowering by 34 cents. But again, it allows us to sell our shares at the strike price of 80 if we manage to sell in the call through our calls. All right, so this will be 4 cents per share. Currently we have 2,230 shares, so this would be a capital loss of around 89 euros. But keep in mind, these 4 cents are likely to be offset by the premium of the option. So for example, if we manage to sell a call and with a strike price of $80, all right, and for example this one right here, keep in mind that we would receive 10 cents per share, right? So still we would be able to offset this very small capital loss just by selling this particular call. So yeah, I'm not too much worried about it. If I would now sell a call, I would much rather sell this one here because it gives us more upside, and of course it would still allow us to anyway to offset any potential losses that we may have on capital. But in this case, it would give us a capital gain, and we'll still receive 5 cents on top of it. But as you can see, the market is assigning a probability of around 96-97%, so it's very unlikely that it will not be able to reach this point for the time being, and this is for the 2-week call, so we'll have to wait and see what happens. But for the time being, this is it. Feel free to leave your comments and your questions below in the comment section. Also feel free to like the video and subscribe to the channel. I'm also available on LinkedIn in case you need to discuss any of these matters further through a DM. And yeah, we'll reconvene at the beginning of week number 18 to see how things are, and I'll see you there.